It is commonly known that you should not invest all your money in one fund, but invest in a portfolio of funds. However, it is not clear to most how to go about building their fund's portfolio. This video explains just that. First thing you should know is that it is not wise to invest all your money in equity, but to invest your savings in equities, debt, or fixed income, and gold. This is called asset allocation. The best way to find the asset allocation right for you is to do your financial planning and check your risk profile. Usually, 5 to 10% in gold and 20 to 50% in fixed income assets, including fixed deposits, depending on your age, is a good thumb rule. The focus of your equity investments is to earn higher returns while managing the risk at an acceptable level. This video emphasizes on how to do this and build your equity portfolio with equity mutual funds, especially for SIP. There are a few hundred equity funds, and new ones keep getting added. These funds are put into different categories based on what the regulations dictates. From a portfolio point of view, it is useful to think of funds as being in two main buckets. One that delivers higher than but close to the market returns but with lower risks, which we call core funds. The second bucket is one that delivers returns significantly higher than the overall market returns, but has higher risks. We call this booster funds. Core funds are weighted in favor of large cap stocks, for example large cap and flexi cap funds, while booster funds are largely mid and small cap stocks, which leads to higher risk due to the relatively small-sized companies or focus on a sector, theme, or factor, which increases the risk as the portfolio is heavily exposed to one kind of risk. The way to build your fund's portfolio is to balance the mix of core and booster funds. Also, depending on your age and the time you have before your big goals need to be funded, you can tweak categories in each bucket and the allocation to each. Younger investors can allocate higher to booster funds, choose certain thematic funds in this bucket, and also choose a mix, for example large and mid-cap funds rather than large-cap funds in the core bucket. You can select the best funds in each category using the MoneyWorks 4Me fund ratings and screener, as explained in the video linked in the description. If you like the MoneyWorks 4Me way of selecting funds, then there is a simple and effective way of building your fund's portfolio, especially for SIP. Just go to Funds 4Me page, select your age group, and you will get the set of top-class funds based on the above rationale curated by our advisors. You will also see that the recommended funds are consistent outperformers, capable of delivering high rolling returns, and have a very good quality portfolio, and is a well-diversified portfolio. This will make you confident of investing in them. You can also see more details by clicking on each fund. But what if you already have invested in some funds? How do you check whether adjustments are necessary? You can use the MoneyWorks 4Me Funds Portfolio Analyzer. It helps you assess if your portfolio is a well-diversified fund that is likely to deliver good results or disappoint you in the future. If you maintain your fund's portfolio on the MoneyWorks 4Me Portfolio Manager, you can check any fund to see if it adds to diversifying your portfolio, or is it just more of the same. If you now feel there's a lot more to investing in mutual funds than you thought, you are right. And if you have a large portfolio, you probably need to work closely with our investment advisor to manage it well and reach your financial goals. As we are fiduciary and act in your best interest, we recommend investing only in direct funds. The money that you save will more than cover our fees. So don't hesitate to contact us.